Good afternoon, everybody. Thank you for joining us today for our 7th webinar of the series titled Combating Corruption, First Lines of Defence in Finance and Procurement. This webinar is held as part of the PEARL Initiative Anti-Corruption Best Practices Programme, and this particular series of webinars is being held in collaboration with Good Corporation. For those of you that aren't familiar with the PEARL Initiative, to give you a quick, brief introduction, we are the region's leading non-profit business-led organisation founded to promote corporate culture of accountability and transparency as a key driver of competitiveness across the Gulf region's private sector. We were founded in 2010 in partnership with the UN Office of Partnerships, and in 2020 celebrate our 10 years anniversary since our inception. Not quite the year for the celebrations, and in light of the recent public health pandemic, our knowledge sharing in-person events have all kind of moved online, including our seminars, workshops and roundtables. So you can access these on our YouTube channel or on our website, and also on-demand viewing. So hey ho, it is what it is. About today's webinar, properly embedded finance and procurement controls provide the most important lines of defence in combating corruption. International anti-corruption laws and guidelines place significant emphasis on the duties performed by these business functions, such as third-party due diligence and supplier onboarding. Certain companies have important anti-corruption controls in place as part of their finance and procurement functions, which includes clear processes to decide when to tender, when to require competitive bids, when to conduct due diligence, and when to retender. As part of the PEARL Initiative's Combating Corruption series, this webinar will help participants to adopt the kind of finance and procurement controls shown by companies achieving best practice in the fight against corruption. Today's webinar will examine data from over 100 anti-bribery and corruption assessments, in which more than 7,000 business practices have been put to the test. Leveraging the expertise and knowledge from our guest speakers here with us today, we aim to discuss how procurement and finance functions are affected by anti-bribery laws, and will also identify those areas these pivotal business functions most often fail to prevent corruption, as well as some examples of best practice. I'd like to introduce our speakers for today. First, our speaker today, joining us from UAE, is Adam Malouf, Chair, Middle East Advisory Committee, Australian Institute of Company Directors. Adam is a seasoned and dynamic C-suite senior executive and non-executive director with a wealth of international and regional experience in strategic, technical and functional areas, having worked with multinational corporations, government, regional conglomerates, family offices, private investment offices and sovereign wealth funds. He has been in the MENA region for 16 years in senior executive roles, CIO, COO, CFO in private equity, investments, funds, asset management, institutional real estate, banking, finance and government. Adam is also a fellow of the Australian Institute of Company Directors and has been a non-executive director and chairman on several operational, supervisory and advisory boards for over 20 years in areas ranging from trade and investment, financial services, funds management, family private investment offices, property, education, healthcare, medical research and endowments. He has also been a member of subcommittees including Executive Committee, Audit, Finance, Risk, Strategic Technology, Projects, Asset and Liability, Treasury, Compliance, Governance, Operations, Investments, Remuneration and Nominations. Adam is also the chair of the Middle East Advisory Committee for the Australian Institute of Company Directors, the world's largest director and governance institute with over 45,000 members across 85 countries. Thank you, Adam, for joining us today. We look forward to hearing your insights on such an exciting topic.
Thank you, Yasmin.
Thanks. Secondly, joining us from London is Michael Pollitt, Senior Business Ethics Consultant at Corporation. For those of you that have been following this series, Michael will be a familiar face as he's been leading and moderating all of these sessions. A regular speaker and trainer on business ethics and issues of ethical company culture, Michael has conducted business ethics training sessions and webinars across the MENA region, including most recently a day-long workshop on business ethics and compliance with clients and potential clients of the European Bank in Cairo. His experience in the MENA region also includes work in Algeria and Saudi Arabia. Before joining Good Corporation, Michael worked as the lead researcher and advisor on business ethics to the chair of the Modern Slavery Bill Evidence Review at the UK Parliament. While in Parliament, Michael worked with a number of high-profile UK politicians, government ministers and government suppliers, focusing on business ethics in general and human rights in particular. Thanks, Michael, for joining us today. Before I hand over to our panelists today, I'd just like to mention that we do like our webinars to be as interactive as possible, The topic when it comes to anti-corruption is quite exciting and generates a lot of exciting questions. So please do ask those to our panelists today. Take advantage of their know-how and expertise, and we'll try to answer them as carefully as possible. But just factoring in that we're trying not, we don't want to be too controversial. But Michael will manage that for us today. So handing over to Michael today, he's going to start with a 10-minute presentation highlighting the work of Good Corporation, and then he'll initiate a deep dive with Adam. So thank you, and over to you, gentlemen.
Thanks very much, Yasmin, for that introduction. It's really great to be back. We were not here last week, but I missed it. I missed coming back to these sessions, and it's really great to be doing one again this week. As Yasmin says, we are going to be doing some talking. So I'm going to start by doing a little presentation, then I'm going to talk to Adam for a while about some key questions that I think you're going to find very interesting. But then crucially, we do want to hear from you guys as well. As Yasmin says, let's make this as interactive as possible. So it's not just us talking to you and talking with each other, but it's you guys talking to us as well. That will make this session so much more valuable. So do keep your questions coming in, and we're going to answer them in a batch at the end of the session. So as Yasmin says, I'm going to talk a little bit initially about Good Corporation and what our data from our assessments tells us about what companies are doing in this area. First of all, who we are, Good Corporation, what gives us the right to be talking to you about anti-bribery and corruption today? Well, we've been working in the area of business ethics and compliance for 20 years now. That's included well over 600 projects in over 85 countries. And from that, we get a lot of assessment data. So a huge part of our work is helping companies to assess whether their ethics and compliance systems are actually working. And from all those assessments, we can put together data in the area of business ethics in general, and data in the area of anti-bribery and corruption in particular. And we're going to be zooming in on some of that data in this session to look at what companies are doing well and what they are doing badly in the specific area of anti-bribery and corruption controls in the procurement and finance functions. So in terms of what the regulatory landscape says about the procurement and finance functions, procurement and finance have always had a very crucial role to play when it comes to preventing bribery and corruption. We headline these functions as the first line of defense in the title of this webinar for a reason, because they are absolutely essential when it comes to embedding a proper anti-corruption program into a business or an organization. And when we talk about the kind of controls that procurement and finance can put in place, we're talking about things like, in the finance sense, use of assets, so making sure that assets are not used for illicit purposes such as bribery and corruption. Things like expense claims, making sure that if we have control of our expense claims, we know how people are spending their money and whether or not it's being used on things like extravagant or excessive gifts and hospitality. Making sure that our invoices are correct and that our books and records are true and that they do not conceal use of funds in any way other than the compliant way. And making sure that our bank accounts are in the appropriate areas. So one of the things we can do when we look at controls in the finance function is making sure that we're not routinely sending money to offshore accounts and things like that. In the procurement area, when we talk about the controls that we like to see in place when we do our assessments, we're talking about things like making sure any element of inappropriate influence is removed from the supplier process and from the supplier management process. So things like conflicts of interest, things like paying or receiving kickbacks or bribes from contractors, from suppliers, making sure that our specifications for tendering processes are clear and are not weighted in the favor of any particular company or any particular partner that we'd like to use, and making sure that once we've onboarded a supplier, once we're working with a supplier, we have the correct contract management processes in place to make sure that they are not committing corrupt acts on our behalf, for example. And the way this looks in terms of regulation, I mean, those are all good things to have, of course they are, but the way these are viewed by the law is that in terms of the US example, when we look at this from America and we look at this from the point of view of the FCPA does have quite strict controls in place on things like books and records. so making sure that those finance elements are properly recorded. It has quite strict controls in place on issues like making sure that our books and records are accurate and that they are accurate enough to prevent illegal activity. So making sure that we're not concealing things by using inaccurate books and records, and we can see from our books and records everything that's going on in the passage of money through the company, so that we can see that it's not being used for any illegal activity. From the UK Bribery Act's point of view, well, as you know by now, the UK Bribery Act places a lot of emphasis on liability. And here, in terms of the context of what we're talking about today, it does place a liability on organisations which fail to prevent their employees from committing bribery or committing corruption. That's whether it's in the procurement function, the finance function, or elsewhere. And the finance function has a crucial role to play in that prevention element, the idea that we are monitoring our books and records and monitoring our financial controls so that we can see any illicit movement of money and we can see anybody trying to use our money for corrupt means. And finally, the loi Sapin-II, so this is French legislation that we used to call it new. It's not that new anymore. It's been around for 3 or 4 years now. Requires companies to implement accounting controls to make sure that we don't conceal any acts of corruption. So what we're getting from this overview of the regulatory landscape is that emphasis on transparency, on clarity, on making sure that we can show the regulatory authorities how our money has been moving around, and so we can show them that we know how it's being used. So in terms of how we use that background to conduct our research then, our research is based on a framework of best practices in the area of business ethics and compliance. We're going to be talking today specifically about our framework on anti-bribery and corruption and about what it says in the area of finance and procurement specifically. But suffice it to say that our framework acts as a checklist of all the best things that a company can be doing to mitigate its anti-bribery and corruption risk and to embed proper, adequate procedures to prevent it. We use this framework to assess a company by going there. We do a lot of our assessment work on the ground, usually, where we fly to the company in question. We spend 2 weeks with them or 1 week with them, shaking hands with them, interviewing them, reading their documents, checking their systems, and interviewing people. And that's how we do our grading. So for every point in that framework, we can allocate a grade according to whether there's a policy in place, whether there is a system in place to implement that policy, whether records show that the system is working, and in terms of interviews, whether people within the company agree that it's working in practice. We don't just interview people within the company, we also interview people outside the company. So people like suppliers would be interviewed as part of this process to make sure that they're fully aware of the anti-bribery and corruption standards of the company. And once we've graded all of our companies in that way, this is well over 100 times that we've done this now in on-the-ground assessments, we can compare how the adequate and inadequate procedures of each company line up. So this is a chart that we use to show the full spectrum of 100 assessments and the percentage of adequate procedures, that's the green, versus inadequate procedures, that's the red. And we often show our clients how they feature on this scale. So it could be that, you know, we do an assessment of a company and they are number 25, they're up towards the top there. And so we would explain to them what key things they have in place which are still inadequate and how they can improve. And when we're doing these assessments, we're looking for certain key criteria, a lot of which relates to the regulatory landscape I already talked about. But just to go through these briefly, we look for safeguards in the financial and procurement functions, anti-bribery and corruption becoming part of the daily work of these departments so that everybody knows where they stand and we're all working on the same hymn sheet. We make sure that suppliers have clear anti-bribery and corruption terms and conditions in their contracts. We say that this is kind of a minimum. In terms of supplier communication, the least you can do is make sure that the anti-bribery and corruption terms and conditions are clear when you contract with them. We look for proper due diligence systems for the onboarding of new suppliers, guidelines for tendering, I already talked about, making sure that our tendering procedures are clear to everybody and not just clear to a certain few companies. We look for separation of duties in the financial department, so making sure that one employee or one group of employees doesn't have inordinate control over a supplier onboarding or contract management process, which can be used to conceal some fraud in that process. We of course look to make sure that there are no inducements in cash or in kind, so giving of money or giving of gifts and hospitality, which could influence procurement decisions from the procurement department's point of view. We look for communication with suppliers on anti-bribery and corruption over and above the contract. So giving somebody a contract to sign is one thing, but communicating with them regularly about what our anti-bribery and corruption standards are is a whole other thing in itself, and we look to make sure companies are doing that as well. And finally, our recommendations and our criteria for our anti-bribery and corruption assessments include the remuneration of agents and suppliers. So making sure that when we are, for example, taking on board people to do sales on our behalf, that our remuneration of those people is not such that it might incentivize bribery and corruption. We've talked in previous sessions about high sales commissions, for example, which could incentivize somebody working as a sales agent on our behalf to engage in illicit activity in order to get that commission, in order to get paid. So we look at the remuneration systems for sales agents and any other kind of intermediary. And so we take all that data, we take all those criteria and all those assessments, and we look at what this tells us about ways companies are doing well and the ways they are doing badly. And this chart summarizes that. So the percentages here are for inadequate procedures. So high numbers on this slide are a bad thing. And we can see, for example, that a very large percentage of companies in our database had inadequate procedures in the area of including audit rights, anti-bribery and corruption audit rights in their supplier contracts. You'd be amazed how many companies do not do this because it's such a simple contractual thing to implement. It's just a clause, and it's a clause that says we have the right to come and check you out if we have any suspicion of anti-bribery and corruption wrongdoing. A lot of companies don't do that. A lot of companies equally don't have those clear anti-bribery and corruption terms for their suppliers. Again, we would say this is quite low-hanging fruit. It's quite a straightforward thing to do to make sure that your anti-bribery and corruption principles are included in supplier contracts. And then there are areas where companies are doing slightly better, but where we'd like to see them improve a lot more. For example, procurement policies communicated to suppliers. It's not that difficult to do. Making sure that suppliers know what your procurement policies are, especially where they relate to bribery and corruption, is fairly straightforward. You can do it as part of the onboarding process. You can do it as part of the ongoing contract management process. But we did find 37% of companies that were failing to do that, and we'd like to see those numbers improve. So the worst practices we've ever seen, as we talked about, is the audit rights question. No specific audit rights in supplier contracts. We see a lot of companies who don't get this right. Sometimes companies have audit rights, but they fail to use them. And that's an interesting thing in itself, that sometimes we have the right to go and check out our suppliers for anti-bribery and corruption risk, but we don't do that. And finally, one of the worst practices we've seen is the idea of evergreen contracts. So we go into companies and we say, oh, we see you've been working with this company for a while. How long has that relationship been going on? They say 15 years. You say, well, when was the last time you put this out to tender? When was the last time you went and checked that this is being done in a transparent way? And it's often been left for a very long time. So evergreen contracts, i.e. contracts that go on forever, are something that we try and encourage our clients to avoid. But some of the best practices we've seen are, as you can imagine, robust due diligence procedures, making sure from the very beginning that we're checking out suppliers and checking out that they've not been engaged in illicit activity in the past, for example. Making sure that there are safeguards built into the tendering and procurement process so that everybody knows where they stand from an anti-bribery and corruption perspective from the very beginning of their relationship with the company. And making sure that we have that separation of duties in improvement and payment of invoices. So making sure that there isn't one employee or one group of employees who has the right of judge and jury and executioner over onboarding new suppliers. So those are the key messages we want to leave you with. In terms of key considerations, keep in mind those key increasing pressure from regulators. Keep in mind the idea of separation of duties, making sure we don't vest inordinate control in the hands of one or a few employees. Making sure that our anti-bribery and corruption audit rights are, first of all, included, and secondly, actually used. Let's avoid the idea of ongoing contracts which renew automatically for a long period of time. Make sure that we're building these safeguards into our tendering and contract management processes. And as we said, making sure that no one person in the finance or procurement functions has inordinate control or sole control over the onboarding or management of a supplier. Now, I've done a lot of talking there, and I've tried to wrap it up with some key points on this slide. But I'm going to shut up for a minute because I'm not the only person here, and you'll be pleased to hear some of the fantastic experience that Adam's going to share with you today. And I wanted to take a step back because I've obviously looked up your background, Adam, and we've heard about it from Yasmin at the top of the session. And I can see that a lot of your responsibilities traditionally are focused on things like investment, so portfolio construction, investment management. And whereas I talked a lot about anti-bribery and corruption controls on the corporate side, maybe you could start by telling us a bit more from your experience of investing about how these controls are managed from the investor perspective.
Thanks, Michael, and thanks for that presentation, which was extremely insightful. Look, the actual process or just actively managing an investment portfolio in itself is complicated in terms of the basics of rates of return, weighting, sector, asset class exposure. That in itself is a very complicated process, and it requires delicate management. But if we look on the periphery of that, how do we get to that portfolio? Who do we get to advise us on that portfolio? What drives the decisions which are made? Each and every step of the way needs to be analysed in the sense of, is what we're doing in the best interests of the organisation? And there are obviously the fundamentals around declaration of conflicts of interest, around transparent tendering processes, when you are tendering and re-tendering for investment management. These are fundamental. And so it starts with the tendering process. How we approach it is that there is no one stakeholder that can monopolize the process. Everyone has shared ownership, whether it's finance, whether it's myself in investment, the administration team, even up to the board as well. So by doing that, you are ensuring that there are checks and balances in place, so that if someone realizes, oh, hang on a minute, if we look at this investment manager, the person who's going to be managing our account is a cousin of someone on the board. So therefore, we have to make a decision. Do we accept that conflict? Do we manage it? And if we're going to manage it, how do we manage it? So as I said, it's every single step when it comes to the allocation, when it comes to the weightings. So say, for example, our investment manager might come to us one day and say, listen, you're a bit underweight when it comes to long-only funds in Europe. Okay, that's great. Give us some options. So they give us some options. Now, they may give us 3 options. One is a long-only fund in Belgium, one's in France, and one's in Germany. And exposure is to US assets. Now, we need to make sure, for example, that there is no one within my team, the team generally, the board, that has exposure to these funds. And it seems very granular, but at the end of the day, even the smallest inkling of someone personally benefiting from a decision made by the company can reflect bad on the organisation. So what does that mean? It means it reflects bad on us as a team. It reflects on, it doesn't leave a good taste in the mouth of the investors or other stakeholders. So this is the level of detail that we have to go to ensure that everything is transparent, above board, and that there is no room, particularly in this case where you are talking about movements of significant amount of money, there is no room for error. There is no room for someone to raise the red flag and say, well, hang on a minute, this doesn't pass the smell test. So that's a bit of a brief about how we look at it, and some sort of practical examples in that regard.
And you've touched on some interesting things there which relate to our own experience about how this has to be everybody's responsibility. It shouldn't be that any one person has overall responsibility for this. It has to be everybody's responsibility. And sometimes we go into companies when we do our assessments, and we're asking questions of people in finance or procurement or, I don't know, human resources. And they say, oh, that's a question for the ethics department, or that's a question for the compliance department, or that's a question for legal. And it's depressing because of exactly what you're saying, that this should be everybody's responsibility. And there are key things that every single function in the business can be doing to support the overall compliance expectations of the company or the overall ethical standards of the company.
That's right. And it has to be like that. And that's not just about managing issues around anti-bribery, fraud, misappropriation. That's about what is the culture of the organization? What is the, what we call at a board level, what's the tone from the top? And that is essential, because if that permeates throughout the organization, then you will not have these issues and you will have a sense of shared responsibility. Because at the end of the day, if someone comes in, whether it's an auditor, an investor, a regulator, they will not say, oh, well, we're only going to focus on this area. They will do a full review of the organisation, and whoever is responsible, whoever this has touched, will be held to account. So that's why it has to start at the beginning of the process, the understanding that everyone needs to take that responsibility.
Absolutely. And so you've touched on something there which I also want to bring up, which is your experience of the very top levels. So, I mean, Yasmin talked about your background at the beginning, and you've obviously got a lot of experience in governance, including things like board level, strategic matters, and etc. And I'd be interested to hear more about your perspective on that, because all of the things that we're talking about today, it's fine for me to be saying these things or for our participants to be listening to these things, but are these conversations being had at the very top level, and has that changed? For example, have you seen trends in the level at which these issues are being discussed at board level over the last 5 years, for example?
Look, I think, Michael, that issues around anti-bribery and corruption have always been discussed at board level. And if they're not discussed at board level, well, then they should be discussed at board level, because the potential impact, if you look at it from a risk matrix point of view, the potential impact from a small event is exponential. And if you don't have the necessary controls and procedures and policies in place, and no one's saying that they are foolproof. I mean, if someone wants to get around the system, they'll get around the system, okay? But, as I say, prevention is better than cure. So if you've got those controls, procedures, policies in place to mitigate as far as possible the eventuality of something like this, then you're at least demonstrating to the outside world and to your internal stakeholders that you're actually taking this seriously. So it's something that is always discussed. Has it been discussed more in the past 5 years? I would say yes, because the level of sophistication when it comes to bribery and corruption has increased. Number one. Number two, because of the fact that so much more, because of technology, is going online when it comes to payments, to movement of funds, remittances, that has meant that those bad actors out there have to find more innovative and creative ways to get around the system. So we've gone from 10, 15 years ago, a much more manual system, which is easy, it's easier to hide things, to a system now which you can't hide things. For example, through the normal payment networks, SWIFT, etc., even going into things like blockchain, for example, where you have something which is a ledger, which is a true record, which no one can touch. So that has meant that boards need to be more heightened to these risks in terms of their awareness. And so I would say that it is being discussed more and more, and it will continue to be discussed more and more, and particularly for those organisations who operate across boundaries. Now, if you operate in one market, it's quite easy to contain, or relatively easier to contain, that risk, because you understand the environment. It's a closed shop. You're not exporting. Your market is, your domestic consumption is all you've got. When you start going across different boundaries, even let's say you're a company based in China, you're exporting to Singapore or Thailand. Okay, it's the same geographical region, but you may as well be exporting to Peru or France, because you're operating across different frameworks from a regulatory, legal point of view. And not only that, different cultural point of view. So what's acceptable in one part of the world is not acceptable in others. And so then you need to reconcile that as an organisation. How do you deal with that? You can't stamp it out yourself. No one person can do that. It's how do you manage that? How do you manage the potential impact that could have on you in terms of your business dealings in that jurisdiction? So I think for not just for large multinationals, but those companies that are operating across maybe 5 or 6 different jurisdictions, it's become increasingly important.
I think that's really interesting, and the point you make about blockchain, etc., is really interesting because it's not something we've discussed in these sessions before. But you're absolutely right, because on reflection, I mean, sometimes we go into companies and we ask about their anti-bribery and corruption controls, or what controls they have in place to prevent bribery of public officials, for example. And they're always telling us, oh, don't worry, guys, we have excellent controls in place on the use of cash, and so there's no worries there. But you're right that the days of a briefcase full of money being pushed across the table are long gone, and we look now at systems where money can be moved at the touch of a button immediately, and money can be moved across blockchain in a way that has totally changed the game. And things like Bitcoin have also totally changed the game. I had someone on the phone to me this morning trying to sell me some Bitcoin, and it reminded me of what a game changer that can be. But yeah, I mean,
for example, Michael, in some parts of the world now, if I've got one of these and someone else has got one of these, and we've got near field communications activated, I can transfer it as we're talking, and it's encrypted, and and it's done through mobile numbers. So it's that easy now. So it's, like you said, the cash suitcases, you don't need it anymore. This is your cash suitcase now.
Yeah, no, I totally agree. And the best companies that we are assessing these days are totally, alert to this, and they're thinking about this. And it's, the worst ones are the ones that are kind of getting left behind because they think they just have to focus on the use of cash. But I agree, it's just not like that anymore. And one of the things that you touched on in your answer just now is another thing that I wanted to pick up with you, because we, looking at it from your perspective is not just kind of a very top level compliance perspective. It's also, you also have a lot of experience in region and in the MENA region specifically. And I would be interested to get your perspective on, when we talk about anti-bribery and corruption risks, perhaps especially in the finance and procurement functions, are there any risks that maybe we haven't talked about that you think are specific to that region? Are we thinking conflicts of interest? Are we thinking gifts and hospitality? What keeps you awake at night from a compliance perspective specific to the MENA region?
Look, I think, Michael, this region in many ways is no different to others in terms of the issues that we face in this regard. Look, I think conflicts of interest is something which is probably up there on the list in terms of those relationships that we have to deal with here. Particularly, you have a lot of familial relationships here. Family companies here comprise probably 85–90% of all businesses in the region. So there are issues around that, and it's not so much how do we avoid them, as I said before. It's how do we deal with them, and most times you can deal with them because of the structures that are in place here, and it's about knowing whether there's going to be a material impact if you accept the conflict. So I think that's probably the main issue here. Look, there are also issues around general bribery, but I think it's important to point out in this part of the world, and I'll speak for the UAE and Saudi Arabia particularly, and other Gulf countries as well, there are extremely strict anti-bribery laws in place that apply to public officials and to private individuals who operate here under the umbrella of private enterprise. You do see from time to time, pardon me, the government does conduct corruption crackdowns, and some of them are public to differing degrees, but it's clear that the government does take it, the various governments in the region do take it seriously here, and they will act. And that's not just governments, that's also regulators as well, whether it's the particularly the financial free zone regulators, whether you're talking about the DFSA in Dubai, the Abu Dhabi Global Market in Abu Dhabi, the CMA in Saudi Arabia, they are serious about this, because for them it's reputational, and they need to make sure that those firms under their purview are operating to globally accepted standards. And why is that? It's reputational, number one, and two, when it comes to attraction of foreign capital, which this region is very, very good at doing. I mean, this region does have a lot of capital as well, that in terms of outflows, but there is an enormous amount of capital that comes into this region. They need to be able to continue to attract that at all levels, not just at small bite-sized levels, but also institutional and sovereign level as well. So it's in their interest to make sure that these laws are not only enacted, but they're implemented in practice. And so, that's also something here which you see, you see it more frequently, I think, than other parts of the world. I mean, in other parts of the world, there's talk about it. Probably an exception is the US, where you see sizable fines dished out to large corporations for compliance breaches, etc. But really here, it's quite more common than you think.
And that leads me on to my next question quite neatly, but I am going to take a minute to just point out to you guys listening that you've been sending your questions in. I would say keep them coming in. We're only going to talk between the two of us for about another 5 minutes, and then we're going to start to look at some of your questions. We have a bit of a competition going at the moment for the most controversial question ever asked at one of these sessions. Do keep your controversial questions coming in. We're very happy to answer them as directly as we can. We're not going to be getting anybody into any trouble here. We won't use your name when you ask the question, but we like to keep these sessions interesting, and sometimes the most controversial questions are the most interesting. But I'm just going to pick up on one of the things that you mentioned there, Adam, about the legal situation locally. So when you talk about making sure that about governments with a vested interest in making sure that high standards are upheld locally, are they thinking in terms of the Foreign Corrupt Practices Act, the UK Bribery Act, the French Loi Sapin-2, for example? Are they thinking about it from that kind of outside-in perspective, or are they thinking about their own laws and their own regulations that they have internally?
Well, it's actually both, Michael, because in this region you've got a conglomeration of organisations and people from all over the world. I mean, in the UAE here, you've got over 200 nationalities of people. You've got companies from everywhere. You've got myriad Fortune 500 companies, FTSE 100 companies operating here. So by definition, considerations around FCPA, UK Antibribery Act are always present, and that doesn't change. And to a certain extent, that is beyond the control of what happens here. So the authorities here, the government here, definitely they look at that, and they try as far as they can to model what they have on these particular extraterritorial pieces of legislation. So in terms of their own anti-bribery, anti-corruption laws here, they are very similar, and they are as stringent, and there is scope to dole out significant penalties if organisations or individuals don't comply. So it's a hybrid system, because in other parts of the world where there's not much foreign investment, it's very domestic, you have your own set of laws and that's it. And if someone comes in from the US, well, FCPA might apply, for example. But here, it's a global hub, and so there is that hybrid or two-tier system, and the aim is to try and get both of them to work together seamlessly, so there's no sort of conflict between the two regimes, if you want to put it that way.
Absolutely, and I think there's another perspective which we need to include here, and as you can tell from Adam's accent, he has another perspective which you can bring to this debate, which is the Australian perspective. I think we should touch on this because it's not something we've discussed in any previous session. Adam has done this a couple of times now. He's brought up things that we just haven't touched on before, and it's interesting. With the Australian perspective then, Adam, with your Australian hat on to the extent that you have one, when we're thinking about anti-bribery and corruption controls, and perhaps specifically how these are affecting companies in the MENA region, how are Australian anti-bribery and corruption standards affecting companies operating in the region?
So, I mean, Australia's anti-bribery and corruption laws are very similar in terms of their extraterritorial application. So, you know, those companies who, for example, have a subsidiary here, even an affiliate company, so it may not necessarily need to be, you know, majority controlled, they are subject to those laws, as are the people who work for those companies here, whether or not those people are Australian nationals. There was a case about 5 years ago of a well-known Australian listed public company operating here in the property development space. There were accusations around bribes paid to suppliers, bribes paid to contractors. Long story short, it ended up in court in Australia, and I think from memory, 2 senior executives in the company, both in Australia and here, were convicted. So it demonstrates that it doesn't matter that they're all the way away in Australia and they're operating here. It can still come back to haunt you. So the laws are actually quite strict, and obviously domestically, when it comes to, for example, you know, bribing public officials, the level of stringency is similar to the US or the UK, but that's a live example of where there have been consequences for a listed entity.
Absolutely, and I'm going to just do another shout out on the questions here. We've got some good questions coming in. Adam and I are going to turn to these in the next couple of minutes, but do keep them coming in. And the ones that we've already got, we're going to sift through those in a minute and just think about how we address them in the final sort of 10 minutes of the session. But before we stop our section of the discussion, Adam, someone's got to use the C word here, haven't they? Someone's got to use the COVID word. We've got to talk about COVID. So let's talk about how, I mean, you can look at COVID as a very negative thing, and of course it is. But one of the things that you and I have talked about in the past is the idea that COVID gives us the opportunity to kind of stop and think for a minute. A lot of people, a lot of businesses, my own included, the company I work with included, we had to take a minute to really sort of reassess when COVID hit. Of course, we all went from working at the office to working where I am now, you know, in my home, and we went from doing our assessments on the ground around the world to doing our assessments remotely, like I'm talking to you now. And we had to stop and think about how we do our job and how we can most effectively help companies that still want to be the very best they can be in terms of ethics and compliance. And that the definition of that has changed a lot, because we're working with companies now that can't do the same kind of training they used to do. So we're helping them with remote training. They can't do the same kind of internal assessments that they used to do. So we're helping them with things like internal assessments. They can't do the same kind of top level messaging that they used to do in terms of hosting town halls, etc. So they're doing a lot more stuff online, like I'm speaking to you now. And so from our perspective, we had to change. And are you seeing any other areas where COVID gives us an opportunity to stop and think and readdress how we do this in the next 5 years or so?
COVID is an external shock. In history, there are many examples of external shocks. But if I compare to the most recent external shock in recent history, which was the global financial crisis, the global financial crisis was a financial crisis, and it was manufactured by humans, basically. COVID's different. COVID is something which, to a large extent, is still and may still be to some degree out of our control. As much as modern technology and human ingenuity will try to beat it, it is something which it just happened. It's one of those freaks of nature. So the difference this time is that it's more pervasive. It's not just about the stock markets or anything. It's everything. It touches everything that we do. And because of that, it is a real watershed. It's a paradigm shift in not just the way we do things, the way we think as people, as in organizations, in our own life, in everything. And so I think that now is the time when it's given us a chance to pause. It's given us a chance to step back and say, right, are we doing things the right way? And it causes you to question not only what we're talking about today, but your whole business model. And it starts to get you think about, are we doing things for the right reason? Are we going down the right path? Is this sustainable? Is this resilient? And under that, you then start looking at, okay, if we're going to go down this path, what does that mean in terms of the way we deal with stakeholders when it comes to, let's use payments as an example. Is this going to work now? With the way we've been doing things. For example, now it's more of a focus on contactless online payments as opposed to cash payments. Now, that's a good thing because you're removing that element of potential corruption. At the same time, you then have to be cognizant of risks of putting everything online in terms of cyber threats, for example. So then you have to start saying, right, we need to focus more on that in terms of investment in infrastructure, in technology. So it is good in that sense, but it throws up a whole different set of considerations, which you just have to address by turn and in a very methodical fashion.
Absolutely, and I'm going to move on from that topic, which we had to address, to some of the questions coming in from you guys watching the session now. Thanks very much for sending your questions in. These are great. Some people asking about if you can get the slides afterwards. You certainly can. We'll send the slides around to everybody who's attended after the session. So the question coming here that talks about something we mentioned to do with separation of duties. So to remind people, this is when we make sure that we don't have one employee or one group of employees who are solely responsible for bringing people into the company as suppliers or managing a particular contract, for example. And it's a very good question. It says, when you're a small company, it's more difficult to separate duties because there's fewer people to go around. How do you achieve this if your employee count is limited? And I would say that you're talking to someone from a small business himself, like good corporation. We are a specialist consultancy with not that many people, but crucially, there are always ways for us to do things the right way, and that would include things like separation of duties. And as long as you have more than one person in the organization, then you've got an opportunity to make sure that one person can put together a call for tenders, for example, and another person can kind of oversee that process. And the crucial thing is to make sure that you can show that you've been through that process of thought, that you've been through those sequence of considerations and thought, okay, we need to have one person responsible for this and another person responsible for that. As long as you can show that you've taken that risk into consideration and crucially documented that, then you're in a much better position than if you say, we're a small company, therefore, of course, we can't have the same level of separation of duties that large companies might be able to enjoy. And I would honestly say that that's possible because we work with a lot of small companies as well as working with a lot of big companies. Adam, do you have any thoughts on that, about how smaller companies can do this very well, especially things like separation of duties?
Look, I've worked in small, medium and large companies, anywhere from 10 people up to 2,000, 3,000 more actually. So, it is achievable. The key thing is documenting it. So it's demonstrating that you've actually gone to the effort. I mean, no one expects you to, for example, go and outsource everything just to remove the element of risk, because number one, that's an expensive exercise for a small organization to do. And number two, just to have to manage all those outsourced relationships itself, it will double the amount of work you're doing. So, it's about saying, right, here's the delineation of responsibilities, here's the process, and having it approved either by the CEO or even the board as part of your policies and procedures and your decision matrix. So it definitely it's achievable. Okay, if you've got a one-person organisation, no, I mean, and it doesn't make it doesn't, you don't need it anyway. But more than that, it definitely works.
Absolutely, and we've worked with some great small companies that have, they have their own non-executive directors, even for a company of a very small size, and non-execs can get involved in, lots of interesting things to do with oversight, making sure that you have more than one pair of eyes on a particular decision, for example. Yeah. And so another question that's come in, which we should address, is a question about auditing. So I think I mentioned auditing during the discussion at some point, and this question says, when we talk about auditing, are we solely talking about the internal auditors doing internal audits on bribery, or should audits always be done by an outside party? Or should audits be done by an outside party at all? And looking at that from our perspective, looking at the bigger companies for a second, a lot of the bigger companies that we work with would do both. So they'd have big internal audit functions that would go around and do the kind of tick box process of, we're here with a few expectations from from corporate level, and we're going to check that you have this in place, this in place, this in place. There's only ever going to be so much those guys can do, because in internal audit, it's always a very busy function. They're always having to adapt quite quickly to new requirements and new standards that the company imposes, etc. And so some of the best companies that we've seen are supplementing that with external audit-like activities. So assessments like we would do, which are a bit more kind of touchy-feely, a bit more kind of on the ground, get to know you for a while type assessments, and a bit less of a tick box exercise. And those two things can often work very well together, because if you're doing, if you've got one person internally making sure that everybody else is in place, making sure that everything is in place, then sometimes you can use external experts in a particular field, so external experts in bribery or in human rights, for example, to sort of fill in the blanks and to make sure that there are no loose ends when you're doing this kind of activity internally. Have you seen much on this, Adam, in terms of the toss-up between whether you do this kind of assessment work internally or externally?
Look, I mean, I think you can't have one without the other. So, I mean, the internal audit, no matter how big, how pervasive it is in an organisation, I think it needs to be augmented by external auditors coming in on a discrete basis for particular issues that perhaps the internal auditor has identified, or even the board audit committee has identified. And why is that? Number one, is to delve deeper into a particular issue, maybe because the internal auditor hasn't got the time, but also it's better for an external party to look at it for two reasons. Number one, it removes any element of subjectivity. And number two, the external auditor can bring to bear their experience with other similar clients in terms of experiences which may help that particular organisation that they're looking at. So I think that they need to work hand in hand. It's not a case of one over the other, and that doesn't matter on the size of the organisation.
Yeah, I would agree with that. And okay, so another question that's come in, I think would be aimed at your kind of board level experience, Adam, and it's asking about, so we've talked a lot about the board level element, and we talked also about the procurement function and about the finance function. And this question is about the extent to which, are you seeing that tone from the top? Are you seeing more communication from the top level of the organization directed specifically towards procurement and finance departments? Are the top level people communicating more with procurement and finance people about the kind of anti-bribery and corruption standards that they expect?
I think obviously it depends on which organisation you're talking about and which industry, but if you want to talk about sorry, if you want to talk about general trends, I think that they are, because you tend to see in an economic climate where conditions are not as good as, say, maybe 6-7 years ago, then in those conditions, that sometimes can ferment issues around payments, which normally don't get looked at, because when things are good, things are good, no one's worried, you're driving revenue, you're driving sales, everything's rosy. When things are not so good, that's when not only you focus from a finance point of view on cost control, but then that then means that when people are under pressure, when they're not reaching their targets, that means that can create a scope or a gap in terms of the way in which contracts are handed out to suppliers, for example. And so I think good boards who can read these trends understand that, okay, now is the time for us to start focusing more on this part of the organization, because this is the critical area which basically manages the flow of funds that keeps us going. And so I think you will generally see boards focusing more on that, as I said, not just from cost, but from payment management. And so, yeah, as a general trend, yes, I think so.
Yes, and so we've only got a couple of minutes left. I'm just going to pick off some more of these questions coming in from the audience before we start to wrap up. One of them here is about the effect of COVID-19 on the ability of the finance and procurement guys to do their job, so on their ability to keep doing their job and supporting compliance as they do so. I think from our perspective, it comes back to what Adam was saying about this is an opportunity to draw a line in the sand and reflect on what we're doing and where we're going, and have a rethink about anything we could be doing better. If you are a procurement function and you're finding that the company's just spending a lot less money than it used to, which would be totally understandable in these kind of climates, and if there's perhaps less of that kind of work coming across your desk, you can take a minute to look more procedurally about systems improvement, to look at how we handle these, how we handle floods of purchase orders when they come in, how we handle floods of demand for spend when they come in. If currently the flood is sort of dried up a little bit, we can start to look more procedurally about key things we have in place, and it's all the stuff we've been talking about in this session. So things like due diligence, separation of duties, ongoing supplier communications, ongoing contract management with regard to bribery and corruption. And the final question I think we're going to have time to touch on here is about how we think these risks and these controls are going to have to change in the next, say, 5 years, and looking specifically at finance and procurement. I mean, Adam, you've already mentioned some really hot topics here, things like Bitcoin, blockchain, etc. We've talked a lot about your various hats, whether it's investment, Australia, MENA, etc. But have you got any sort of final thoughts on what you think is going to happen over the next 5 years or so?
I think when it comes to finance and procurement, I mean, what this period has shown us is that everyone's very much capable of working the way we are now, talking through a screen and doing everything remotely, electronically. I think that in the next 5 to 10 years, that will only increase, and the sophistication of infrastructure around that technology will only increase. So what does that mean? It means that, yes, things can be done quicker, but as quickly as things can happen for a good reason, they can happen for a bad reason as well. So I think that the level of controls and procedures and protocols will have to be tightened a lot more than they are now to deal with that.
Absolutely, and I think that kind of thing is going to keep people like me and Good Corporation very busy for the next 5 years as well, and we're very grateful for that. So we're going to have to wrap it up there, guys. So in terms of the next session in the series, it's the last session in the series, so we'd highly recommend that you attend that. Some of you have very kindly attended all of these sessions, and there's been some fantastic feedback coming in even during this session in the questions comment box, saying that you really enjoyed it. If you are enjoying it, do come in and tune in for this next session on compliance and monitoring, which is happening later this week. We're doing 2 this week in our final week. And other than that, I think it just remains for me to say a huge thanks to Yasmin for introducing, a huge thanks to everybody for joining in. We had some fantastic questions there and we really appreciate it. And Adam, finally to you, a huge thank you for your contribution, which was absolutely fascinating today.
No, thank you very much, Michael, and to the Good Corporation. Thank you, Yasmin, and the Pearl Initiative, and thank you for everyone who's been listening today. I hope you took something away from it.
Great. Okay, thanks very much, guys, and we'll see you next time.